Hello everyone. Hope everyone's having a good weekend. Is it just me or has this weekend been really long? I feel like I've been off the charts for a week. Anyway, let's go over the outlook and previous week's EOD, the week that just finished. Hope everyone had a great previous week, even though there were not many setups that I did like. But let's get into the EOD of previous week of 22. Firstly, let's just move into the outlook and do a quick recap. So I'm not going to get into everything. I'm going to get just into this. So there was basically two scenarios. Just to sum it up, I either wanted to see price inverse this gap here and then travel to see these equal highs here. And then if we still remain bullish after taking these equal highs, then we could have balanced the previous week range. And the other scenario is that if we do respect this gap here, we're probably going to trade lower. And we're more likely going to see the opening range gap get filled and fill the new week opening gap and then close below it. One of the main reasons why I believe this was because of the weekly open, how the manipulation move into it was really shallow, and even though it did move into a new week opening gap, it would have been nicer for it to move into something more prominent. So, there was just a quick recap of the previous week outlook. Let me read this really quickly. The price condition between the equal highs and lower prices is the range condition. It's totally viable that we respect the range condition and start moving lower to get a deeper price action. Firstly, if it wants to fill the opening range gap, and secondly, if it wants to have another stab at the weekly open. Because I don't know if I'm convinced that the small wick we have into it deemed as an efficient manipulation. We will be hinted at this question by if price wants to respect the 4-hour gap or not. By 4-hour gap, I meant this gap here. Otherwise, if we respect it, I'd like to see it reach into those equal highs, which are also the high. When I was talking about the gap just a couple of seconds ago, I meant this gap, not this gap. So I was saying if we respect this gap, then we're going to inverse this gap. If we inverse this gap, then we're going to get to these highs. But if we disrespect this gap and respect this high, then we move lower and fill the new opening gap. Otherwise, if we respect it, I'd like to see it reach into those equal highs, which are also the high of the daily gap, making an instant high that will need reassessment within to see if it wants to leave that weekly range unbalanced or dig higher and rebalance it. So there's the outlook. And let's move really quickly into the EOD. EOD is usually pretty short because it's just a summary of what happened. So to put it as simple as it really is, all of the range conditions that would have been used as retracements were heavily displaced through. Interesting is that most of these moves happen overnight. So you can see this was the gap here, and we had this 4-hour condition here and the equal highs there. So what happened was that we respected this 4-hour gap, we displaced lower, left a end dog, and then we started trading lower, inversed the new week opening gap as well as this, and pushed heavily through discounted lows. So we're okay. And then we fell into a volume imbalance and then started to consolidate. So we moved all the way down here. Went to this volume imbalance, and then we started to chop around at the end of the week. Okay, so I have two outlooks for this week. One outlook I want to do over on this video, and the other outlook I already have it done here, and it's inside of this what do you call this, a block? Yeah, inside of this block here, and the other outlook I would want to do it on video. So I think I'm probably going to go with the outlook on here first, and then we can get into the outlook by using the weekly templates. So let's get into the outlook first, and then we'll do the weekly one on chart with ourselves. I have TradingView ready here. So let's just finish the outlook first on the notional book. So things I want to notice is this order block here has been holding price for the past month higher. We had a new month open. The month had a quite of a big wick higher, failing to close above the constant counterquartment of this gap, of this wick here. And as you know, wicks are viewed as gaps by the algorithm, and what the algorithm seeks to do is fill these gaps to around the 50% level, and then from there it would start to move where it really wants to move. So for example, let's see here, see this gap here, we fell around the 50% level of it, and then we start trading higher. And then so let's move into what did I want to talk about? Could be looking at bearish month here, 3 days left until there's a new monthly open. Month could close at about the previous order block that we recently delivered from. So you see the month has 3 days and 9 hours left. So that could be one of the main reasons why this month could close bearish and into that order block. Okay, yeah, so sorry about that. So as I was saying, the monthly open could have had this wick as manipulation and then a move lower and then possibly a close, because I was just saying the 3 days till the monthly close could be into this order block that we recently had this candle higher off of, and you could see the monthly open manipulation into the order block, and then the move higher, close around the high, and then we have a new month here. The month rebalanced a fair value gap here and then started to trade back lower into here, and as you can see we left this wick here, which is significant on lower time frames, which I'll get into right now. So as you can see, this would be the wick on lower time frames. As you can see, it's also into the mitigation block. And let me get back to the point. I'm getting off track here. Okay. So anyway, so the first thing I want to note here is that we have this range here. So there's an equilibrium here, and also an equilibrium at here within this full range here. So I was saying, considering how it's placed through two ranges, take the dealing range. Notice we still haven't met or respected any range that was within the discount. This leads me to believe that this week's expansion is most likely going to be lower towards this intermediate term low, giving us a market maker sun model. So notice here we have the two ranges here, displaced through this range and through this imbalance here with displacement, displaced through this gap here and this mitigation block here with displacement as well. So the only logical standpoint that we are most likely going to be reaching for is this low here, giving us a market maker sun model. I have not yet graded it, but as I said, I will do it with you guys, and I'll also do the weekly template with you guys on this video. So let's see here. So this is a daily time frame. I graded the market maker sun model here, but without the I didn't grade the turtle soups and on the delivery to the equilibrium. But all you have to know with this model is that we had the market shift within the second stage delivery, and then there is a discounted sell side liquidity, which would complete the market maker sell model. And there's that volume imbalance that we are currently bouncing off of. So let me go here. Okay, so although rejecting off of the imbalance, this looks like a second stage. Oh no, not the imbalance, the volume imbalance. This looks like a second stage manipulation to inverse the array that could deliver, and this inversion could possibly be the imbalance right above. So the first thing I meant by the second stage manipulation is that you can see we have the first stab into this volume imbalance, and then we have a small delivery higher. This small delivery higher can deliver us a second stage manipulation into this nested high and into this fair value gap here, and then to start moving lower, because this would give us a Baker framework, the high low, higher high, and then lower low. Okay, and then that could take us to the volume imbalance into the order block, which as we recently mentioned was the manipulation point of previous month, and we started delivering higher off of that, and we'll just be looking to see how price reacts within this level. That's why I have it in magnifying glass right there. Oops. Okay, or price could why do I have this screenshot posted twice? Otherwise, price can just plummet lower and inverse the volume balance itself. So it could just not do the second stage manipulation and just dump lower from this price point and then meet the order block on Monday or Tuesday. Also, this depends on potential breaker being ready to form, linked with the monthly as well. So so high low, higher high, and then hopefully a lower low to presume the matching with the discounted sell side liquidity kind of sort of direction. which would be quite lower than the sell model. So let me go back to the screenshot here. So the sell model being completed would be around here, but the breaker formation would be here. This would just mean that we'd have to extend the sell model lower, and to price graded, the market shift would have just happened last week. So at this low here, displacing through that would be the market shift, and also violating this fair value gap, making it a market shift. Also, the standard deviation projections of the inception leg matches pretty nicely with the presumed D at minus 3 times the deviation. As you can see, it's the last up move we have before this big move lower and to initiate the market maker sun model. I'm going to be doing something kind of different now. It's going to be incorporating the different type of indices and the dollar with NQ's foundation. So with the S&P, it's the most simple one. If this wants to load. This image couldn't be loaded, okay. Okay, there. So, this is the YM. Where's the S&P? Okay, so the S&P here, following NQ's lead with a decent pace. So you guys must be familiar with how the indices are linked together. So basically, Nasdaq is the leading one because it contains the high tech, high yield, high risk, high movement type stocks. The S&P has the more generic ones, like the top 500 stocks in the world, like Apple, Nike, Tesla, whatever. And the YM has the has the less volatile stuff, more like McDonald's, Starbucks, just the less volatile stuff like Walmart or those type of stocks. So S&P following NQ's lead with decent pace. So the hierarchy for the indices is Nasdaq, it's S&P, and then the YM or the Dow. And what it would look like is if Nasdaq has a move like this, then you can expect the S&P to have a kind of delayed move. So you can see we can match this low with this low here, so it's moving pretty precisely with it and has the move here. And you can see that this there's kind of like a 1 week delay. I'm not saying that as a precise time segment, just something for you can anticipate visually and see visually. You can see that we have this move lower here, and this move lower here is still lagging behind Nasdaq and does not catch up to the volume that Nasdaq produces, because S&P is the less volatile index. So comparing with the YM, as you would know, the YM is even slower than the S&P. I compared here the Nasdaq on the weekly versus the YM on the daily, because if I compare it on the weekly, the YM would have this part of the price action completely blurred out. So you would only have this up move here, excluding this move lower here. So I wanted to put it in perspective on the daily and show you that the YM is actually preparing to do this weekly move lower to catch up with what the Nasdaq is doing. Let me take this into the charts actually, because I think that will make it easier to see visually. So if I were going to go on the YM over here, if this wants to load, my Wi-Fi is bugging, so I'm gonna have to get back on that whenever it stops doing that. So anyway, you can get the picture. The Nasdaq already performed this move lower, and the YM, which is a slower index, is preparing this move lower by retracing to an equilibrium, this fair value gap here, as well as this mitigation block here, and then preparing to do the expansion lower, which I'm highly anticipating for the month upcoming. So, and now let's move into the dollar a bit. So the dollar on the monthly doesn't really tell me a story. You can see we have this dealing range here. We're floating around the equilibrium of this dealing range within this imbalance here and this imbalance here. So not much to be anticipating. And if you take this mitigation block here and you divide it into you narrow it down to where it lies within equilibrium, you can see that we're respecting it body-wise. And we are within this consolidation range equilibrium, so this range here. You can see prices hanging around that equilibrium price point pretty decently. So this is the equilibrium of the consolidation range. You can see price is back and forth moving towards it. There was not one candle that did not interact with the equilibrium. Other than these recent candles, of course, and this one here. So most of the candles are interacting with the equilibrium. Not much of a story on dollar, consolidating and fading to market shift on nothing significant level. The weekly doesn't tell you much either. It just tells me that we are also bouncing between these two arrays here, this array here and this array here. The dollar could see a slight move higher into equilibrium of this range if this array here holds as it's supposed to. But the daily doesn't tell you much either. Basically following the same narrative as the weekly. So I wanted to get into the weekly pricing. So yeah, here I think that stopped moving out. So here I'm going on the weekly. Okay, so they're both on the weekly. So you can see price has been preparing this down movement here, and since the YM is on the lower level of the index hierarchy, you can expect that this move lower here that happened on Nasdaq will happen soon on the YM, just because the YM is delayed. That's why we didn't see it sooner. But I want to get into grading the price swings. Doing the weekly template. Sorry. Yeah, the weekly template on the Nasdaq. So, what did I want to do here? Sure. Delete this. So we have the monthly open deleted. Let me go on the 4-hour time frame. Okay, where is... Okay, so Sunday candle will open right there. It's the daily. It's actually it's 3 p.m. right now, so I think doing the weekly outlook will not work since it's not Sunday, 6 p.m. especially Sunday 6 p.m. because that's when the week opens. So I guess we're gonna have to cut today's video short. I thought I was gonna be able to find the Sunday opening, but I don't know, it kind of slipped my mind that we're still not on Sunday. We're on Sunday, but the Sunday candle did not open yet, so the next Sunday candle would be the next candle right after this one. So you see Friday and then Sunday, and that's around 6 p.m. So we're gonna have to delay the weekly template for another video, possibly a catch-up video. But yeah, that was the EOD, and that was basically everything for my next week's analysis. And there is one thing I do want to go over, actually. I have it down here on my notepad. Okay. Thursday this one. I'll leave that for another video right out of this one. So I think I'll just leave this one to be just the EOD and the outlook. And I'll do all of the recaps and market reviews that I missed from previous week, which are Friday and Thursday, and also have some trade recaps I need to make a video on. And I'll leave it for another video because I don't want this video to be too long. I think 19 minutes is good enough for you guys' attention span. So yeah, that's gonna be it for this video, and have a good week, everybody.